Hello and good morning. I welcome you to the morning meeting today on Tuesday, the 20th of March 2018. This is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers as their global head of research and education. And so, unfortunately, the price action starts to somehow dry out a little. So from a technical standpoint, we have in several markets a very choppy price action, and I somehow start to fear that this is probably something which we get to see till tomorrow in the evening when we have the Fed rate decision here, which in fact does not has so much potential to surprise on one or the other hand. It's the first rate decision with Jay Powell, the new Fed chairman. Thing is that he surprised with a more hawkish stance, I'd say, in front of the Congress several weeks ago, and probably this is something which we can also hear tomorrow then. But let's see. I'm not really sure. What we can definitely say is that all in all, if you look at the price action in the DAX, it perfectly illustrates that the market does not really know what to expect tomorrow from the Fed, but also behaves in some way. I wouldn't say strange, but nevertheless in some way a little irritating after the comments yesterday around the ECB. There was some surprise, in my opinion, was a surprise, since at several meetings of the ECB and rate decisions, what we've heard here in the past was that they plan to hold rates at the current very low level, even way after the end of the QE program, the asset purchase. And yesterday there was a statement that here the ECB officials start to agree that probably we could look at rate hikes from Q2 2019 onwards. And I have to say that this is in fact very hawkish, because I mean it's relative. If you say we plan to hold the current interest rate level at the current level, the low level, for an extended period of time, even after the QE program, since it does not directly state how long is long, but nevertheless it's something where I have to say, if Q2 2019 is probably the starting point of a more restrictive monetary policy, and something where we then have to say, okay, we should expect hiking rates. Usually you expect a more dovish, a more bearish a picture than in the DAX. In fact, yesterday the first reaction was bullish. We pushed back above 12,300 points, but nevertheless saw some pressure then in the evening building. Probably it was just with some delay that the market reacted in the way you expect them to react. But currently you have to say also here in the afternoon that all in all, the DAX then presented itself quite stable and is still presenting itself stable. So in fact, in the morning, I didn't take short engagements into account. That was mainly due to technical reasons. So here we're open range between 12,242 and 12,282. And I said, well, I don't want to trade breaks on the downside, mainly due to the fact that we are trading above this blue line here, this trend line, which is the exponential moving average 50 on a 5-minute time frame. And above that, you don't want to be short. It's in fact a trend filter. So now we've seen the break on the downside. The market pushed towards 12,200 points, but is obviously not capable of really attacking the lows from yesterday, but instead trading back above 12,200 points. So all in all, there's a clear bearish touch. Nevertheless, I wouldn't trade aggressively the short side in the DAX also now, only because we are still trading in the region around the potential short trigger. This is the Xetra open here. It's the open at 8 a.m. GMT. Where the spot market comes to life then here in Germany, and where the main volume pours into the market, and that's also here the deep blue line, that's the closing price from yesterday. Usually you consider this region to be a potential resistance now on the upside, but yeah, all in all, I somehow doubt that there will be so much pressure building. We definitely have to wait for the US equity markets. Now the picture here is, again, the picture in the DAX is not very clear. Yes, there's a bearish touch somehow. nevertheless, as long as we trade above 12,000 and in fact the pre-week lows, which is can be found around 12,120 here, I think the picture is still neutral, and we have a chance to probably push back into the range, probably back also to the highs here around 12,450, 470, 500 points. But within this, it's definitely a neutral picture all in all. Not sure if this can be changed by the US equity markets. If you have a look here in Dow Jones, for example, yesterday we broke below short-term support, which I consider to be interesting, 24,700 points. We took on some momentum. Nevertheless, the market could stabilize into the evening then. If you look at the overall picture, you can definitely see that it's a very, very unspectacular picture, very choppy picture. Not sure in which direction the price action will push us today. Again, with the Fed tomorrow, I have serious doubts that there will be a serious momentum taking on one or the other hand, and that's something we have definitely to wait for. It's kind of a coin toss here. If there will be a push higher or if there will be another push to the lows from yesterday. All in all, right now, I think chances that the choppiness till tomorrow in the evening will continue is quite high here. In fact, that's it. So nothing more to add here. It's a very choppy picture in the Dow Jones, a very choppy picture in the European equity markets, in the DAX then. Same is true for the S&P. Let's have a look at the euro. I think there was also a quite interesting reaction yesterday it wasn't interesting, but it was like something you could expect here with this push higher. Since this bullishness here based on these comments around the ECB do not really surprise. Nevertheless, if I have somehow to say, if you look at the picture, the overall picture is still neutral. The news itself, I have the feeling that in the past it probably would have created some more price action, especially on the upside, and that the euro in this case does not react that bullish and is really taking on serious momentum on the upside. Also shows that there's obviously serious doubts if such a hawkish approach is really applicable to the monetary policy of the European Central Bank here. So all in all, it seems as if we now have to wait for the Fed tomorrow. Let's see whether they deliver something. The overall picture didn't change. That's definitely a fact. If you look at the 4-hour chart here, you can see that we still find support around 2170, 2220 on the downside, even if we now take on another attempt to attack and drop below 23. Same is true on the upside here for 2440, 2450. If we push above that level, 2540, 2550 is the next target to look for. All in all, everything in between is neutral, choppy sideways. And this is the thing. So some questions arose here during the German version of the morning meeting from people asking, hey, what do you think? Probably the short side is nevertheless the one to favor here. I have to say yes, if or without the comments from yesterday, probably yes. But with those comments from yesterday around the more hawkish stance from European Central Bank, I somehow doubt that the euro can series taking on momentum on the downside. So some might probably say, but look at this year. I mean, we obviously failed to take on momentum on the upside and attack the highs from yesterday, but instead now saw serious pressure building, probably also finding a small catalyst at least in the quite mixed data around the ZEW, even though I don't think that this is the main driver for bigger volatility here. But nevertheless, I think those moves currently are more coincidentally than they are really the real deal moves, some where you really say, okay, this is significant momentum now. We're taking on significant technical levels here on the upside, on the downside, and from here, let's probably, or no, the long, respectively the short side, wherever this break then occurs, should be favored. So based on that, I really doubt that this is such a spectacular picture here, let's just see whether the Fed can deliver something more interesting tomorrow then. with Jay Powell's first rate decision here. Probably his comments will trigger some further volatility, but currently the picture does not look that spectacular. And in fact, the same is true for dollar Japanese yen. Still sideways, some momentum on the upside, yes. So we can definitely stabilize above 105.50 here, which is a good sign. Nevertheless, everything below 107.50, 108, I mean, is neutral, but with a clear bearish stance. So the moment we make it above 108, probably then further momentum should be expected, pushing us higher to 110.50 probably. But currently, that's only first, and yeah, it's a glim, let's say. It's nothing more. And there's some hope that probably the momentum on the downside won't be, we won't see any further aggressive momentum on the downside here from some dollar Japanese yen bulls. But all in all, let's just see. I mean, dollar Japanese yen does not look that strong here. All in all, it seems to be only consolidation. The main driver probably for volatility, if at all, is the Fed tomorrow. Same is obviously true for gold, which is giving back the gains from yesterday. All in all, nothing more, nothing new to add here. I think what's definitely interesting is to see what pound sterling is delivering here. Even though this red candle now is showing some weakness and we are about to retest the lows of the day. Interesting. I think it's very interesting to see that we are still very stable, even though inflation data in the morning came in below expectation. Yesterday I made the inflation today and also the employment situation tomorrow, and then the Bank of England on Thursday a topic. And I said, well, I have the feeling that we are probably about to see some further gains here, especially from a technical side that looks very promising after the market broke above this trend line here, retested those highs, and then took off from there. We traded below 140 here yesterday during the morning meeting, but then there was some mentioning of a deal or transition, at least at transition period here. The news which came in above the tick, which tickered here, and which the news ticker saw. And the interesting thing is that this news triggered the bullish action I would have expected to happen today, with inflation rate coming in above expectation probably. That's something I mentioned yesterday, so we saw it already yesterday. So today, when the inflation rate came in below expectation, usually you expect pound sterling giving back most of these gains from yesterday probably. But I have to say it's very, very solid what pound sterling is producing here. And probably, yes, we'll make it back to these breakout level from yesterday, but I consider the region around 39.80, 140 potential long trigger here, against which it could be worth to give it a try to see another attempt pushing towards 141, probably even higher than that one, towards 140, 130, 140, 150 here on the upside. So all in all, the present what we get to see right now is quite strong what pound sterling delivers here, even though inflation data came in below expectation. Usually, again, you expect pound sterling to give back those gains from yesterday. That it doesn't, it's usually a sign of strength, I think. And if employment situation a surprise on the upside tomorrow, respectively, there's more hawkish stance to the Bank of England than on Thursday. Could be that we see another significant attempt to take out 141 again and push higher here in pound sterling, US dollar. So definitely worth a look, especially when looking at the other markets which do not present so much volatility and action right now. And that's it from my end. Happy trading. What's your stops? Talk to you again tomorrow, 10:30 a.m. GMT. Yeah, that's it. Take care. See you and bye-bye.